Introducing iPhone 12.
Hello and welcome to Bazaar Morning Call. I'm Lata, Anuj with me and Sonia from her home. Well, the iPhone 12, the mini, which is the most affordable, is 51,000 in the US and 70,000 in India. Yeah. And at least at 70,000. The last time they launched, the only version was 1 lakh.
Yeah, but this is because, as you said, it's mini, and I think the biggest one is 1.2.
Yeah, 1.3 lakh.
1.3
the biggest
lakh.
one is the Pro Max.
Yeah, so I mean that's why Apple trades at where it trades, right? I've always had a firm belief that of the 1.3 lakh price, 30,000 is the price of the phone, and 1 lakh is your ego.
No, that's it's not ego. It is ignorance. It's not ego. It is ignorance. I get scared of any other product. This one, I know, my iPad, my iPhone, my iPod, everything works on similar lines. So it's more ignorance. It's just a worry that I may not be able to handle something else. So ego is only one thing. But that's true of all products. Yes. In a Coke bottle, the product would be less than a rupee. Yeah. The rest is the brand value, and that's what happens in iPhone as well. But yeah, we have a market to discuss, and that one is dithering at highs. It's very clear. And the dithering has come from across global markets. You're seeing the US markets and the Asian markets kind of wondering whether there is enough muscle to move. I guess you just don't go up in a straight line. The dithering may be only for a few days, and we may still go ahead. You can see it in the dollar index very clearly. The dollar index has now marched to 93.5. There have been times when the dollar index has been stronger and India has still emerged unscathed. But generally, it is negative for emerging markets when the dollar index becomes a little expensive. Yesterday, when we were trading, it was 93.1. Today, it's 93.5. And this is more because Europe is seeing more lockdowns and more cases. So the dollar has become expensive vis-a-vis the euro, but the index itself has gotten stronger. Well, in India, it's going to be more of the same. The tussle between the bulls and bears will continue. We will continue. The bank nifty will continue to be a prisoner to the interest waiver case. We just hope that finally today we get a decision. But until then, the bank nifty will keep wondering what happens over there. Well, among other things, we spoke to the chief economic advisor yesterday, and all the papers have got something similar, that there are more stimulus packages coming. But going by the size of the previous, I don't think this is going to be market moving. Morning, Anuj.
Morning, Lata. And you know what? The market keeps getting these noises about, the vaccine trials getting, paused and all, and that keeps giving you an entry opportunity, or, keeps giving you dips. But really, for me, what's been interesting is that in this rally, it's been tough to make money. It's looked very sharp and fast. You made a lot of money if you have traded the index. But if you have not, in that case, just look at the numbers now. In fact, now month to date, we have turned negative for the mid-cap index. Despite the big rally that we have seen in the large-cap index, which is up 6%, the mid-cap index is down 0.4%. And I'll just tell you one more thing. All through this October series, barring 2 days, the market breadth has favored declines. That's not a healthy market where the index keeps moving up. I mean, I'm not talking about, advanced decline of say 3:1, 4:1. It's not even been say 1.5:1. It's consistently been in favor of the declines. And one more point, yesterday in last hour, there was a brutal sell-off in the pharma space. So, I mean, not a time to short yet, perhaps in this market, but you want to be a bit cautious. As of now, there's no reversal sign. I think that comes if you start to trade and close below 11,850. I think till then you would want to buy the dips because
the lows have been higher over the 2 days.
Higher over the last 2 days.
Tuesday low is higher than the Monday low.
887. Yes, I take the point. So that's why 867, 850 sort of becomes your reference point, Lata. Also the bank nifty. It's the third time that it's halted at 24,000. 24,000, 25,000 has been a strong resistance, and every time it goes to 20,000, it has this rally. It looks like it's breaking out, and then again it fails at 24,000 Also, the 200-day moving average has been around that. It's not been able to pierce the 200-day moving average. 23,700 today, of course, is that, hopefully something will come. No more postponement of that case, but Bank Nifty would be something to keep an eye on. Sonia, good morning.
Hi guys, good morning. Morning Anuj, morning Lata. You guys were commenting on the new iPhone 12. I just want to make one point. It is exactly like the iPhone 5. I don't know if Lata has used it. I know Anuj hasn't, but the features are exactly the same, just 3 times more expensive. So you were talking about the price you pay for ignorance. I guess this is it. But anyway, coming back to the markets, Anuj, you were making that point about how there could be this stalling of the whole coronavirus vaccine issue, and that will give a buying opportunity. That's exactly what's playing out right now, right? I mean, you saw the US markets under pressure. Our own markets as well have halted a bit, although there was delivery-based buying in a lot of large caps like Infosys, Reliance, etc. But the question is that, is it too soon to call a change in the trend, a reversal of the trend? Or do you think that you're getting some signs of that? I mean, how would you map, say, the next fortnight or so?
I think the signs are there on the broader market, but Sonia, one thing that I've learned is that you don't preempt anything in the market. You just respect what the market does. So the market will give you that sign if it closes below 11,850. If it doesn't, in that case, what you do is, you trust the market's texture, and that's been working. But if you start to close below 11,850, I think there could be a problem. I think also a lot will depend on how much more can IT support this market, because we've had a phenomenal run on the IT stocks. We saw TCS after the results sort of made a bit of a cap at around 3,000. I think today you will see the same with Wipro, because almost so much good news is priced in Wipro that today it will make some kind of a near-term peak. So in that way, where does the market get support now? Reliance has started to move up a bit, but really the big support has to come from the Bank Nifty. And I think on that, really today's verdict, if we get it today, by the way, becomes very crucial.
Yeah, I guess it's about time. Yeah. Okay, let's get to equity advice, and it's important because the market is dithering. It's a perfect tussle between bulls and bears. So here's some advice, but this is for investors. Mahesh Nandurkar of Jefferies says their economic recovery tracker improved 2 percentage points over the fortnight to 96% of pre-COVID level. This is noteworthy given the strictest lockdown and weak stimulus. Continued economy reopening remains the key driver, and the recent decline in COVID-19 cases has helped. Potential festive demand surge will be final confirmation of the strong recovery trend. Their preferred recovery plays are HDFC, ICICI Bank, Maruti, DLF, Godrej Properties, Ambuja Cement and Jubilant Food. All right, with that, let's get you some money market cues. This one is on the rupee. Bank of America, okay, or is this equities? Bank of America conducted a global fund managers survey and respondents said the recession is over. The advice, reducing cash, pause cyclical rotation and price in a contested election and a February vaccine. Fund managers say investors should sell S&P 500 above 3,600 and cyclical rotation via banks and energy will resume in Q4. I'm sorry, that was an equity call.
All right, and here's the money market views coming in. First up on the rupee, you have Shinhan giving us their view. An elusive US stimulus agreement halted COVID-19 vaccine trials. No progress on the Brexit deal and a rising number of coronavirus contagions, followed with their respective restrictions, firm demand for safe haven assets. Positionally for the dollar-INR pair, 73.15 remains an immediate support, while 73.70 is a crucial resistance level to watch out for.
Okay, on bonds, Dhaval Dalal of Edelweiss says the MPC's decisions to maintain a accommodative stance as long as necessary and putting growth ahead of inflation were welcomed by the bond market. It means no rate hike till March 2022. This should help in gradual decline in term premiums and flattening of bond yield curve. Yields have fallen by 5 to 10 basis points across the curve. They expect further decline, a trend towards 5.75 in the medium term.
Okay, and let's talk about the global cues then. Here's Nigel with the world view.
Well, the US markets ended in the red in yesterday's trading session. The Dow snapped a 4-session winning streak. Well, what are the factors at play then in yesterday's trading session? Not too favorable news coming in terms of a vaccine. Yesterday, we heard about Johnson & Johnson. There's a pause out there in terms of their trials for a potential coronavirus vaccine. And, overnight, US regulators, they have paused Eli Lilly's late-stage trial due to safety concerns. So not too great news there. Both these two stocks were under pressure, down between 2 to around 2.5% in yesterday's trade. The other factor at play was the corporate earnings. And we had Citigroup as well as JP Morgan. Both those numbers were better than what the market was working with, but both of them saw some profit booking. And you also had Delta Air. The losses out there were more than expected. So all those three stocks ended in the red. However, BlackRock did end with a gain of close to around 4%. That's the asset management company, because more assets under management, the markets out there reacted favorably to those set of numbers. Moving on, though, in terms of a stimulus, well, there was a span in the works because you had, the speaker out there saying that there's no meaningful progress in terms of a stimulus, though most of the market out there is factoring in maybe post the presidential election, you'll get some kind of stimulus in those markets. The Apple phone launch, yes, everyone has been talking about it. The stock launched ahead of it. The stock was up nearly around 7% in the previous trading session. Yesterday, post its launch, did come in for profit booking. That was down close to around 2% or thereabouts. In terms of other asset classes, the dollar index, that strengthened a tad bit. Earlier this week, it was at around 93. That's moved to around 93.5 odd. And in reaction to that as well, you have gold. A stronger dollar, that means that gold, in fact, has seen some profit booking to the tune of around 1.5%. European markets as well ended in the red out there. There's talk that, in fact, you'll see further restrictions. And in certain parts of Europe, it's already been implemented. Case in point being Netherlands. Out there, in the bars and coffee shops as well, you've seen, restrictions being imposed out there. They'll be closing all those bars and coffee shops and restaurants. Besides that, France president today, in fact, he's going to be announcing some restrictions out there. And in the United Kingdom as well, the opposition has demanded various lockdowns. So there has been various impositions on a lot of those places in Europe, and that's what led to some nervousness. Asian markets today, they're trading in the red. And because of all these factors, SGX Nifty is indicating a bit of a downtick. Back to you guys.
Oh, yes, it's about 0.5% across. Thanks for that, Nigel. Well, will macro news move the markets? We are just playing this bite for you. We spoke to the Chief Economic Advisor, Krishnamurthy Subramaniam, and he says the centre does have fiscal space to work with. He almost hinted about an urban employment guarantee scheme, said it is in the works. Listen in.
There is fiscal space that has been provided by the external situation, and the fact that last week, in fact, the Fed chairman also mentioned that that the US, for instance, is unlikely to wind down on its easy monetary policy anytime soon. I feel that from a macro fundamental perspective, and the fact that in India, the evidence clearly points out to increased growth actually helps debt sustainability in the medium term, there is a space. I think that employment is important because that provides an assurance of income going forward, and thereby provides people the comfort to go and spend, reduces the impact of this precautionary motive to save in the amidst the uncertainty. So that is certainly being something that is being considered.
Okay, so that is being considered, an employment guarantee scheme, and maybe some infrastructure projects as well. The CEA distinctly referred to that, though he didn't give us any time or any amount. The other macro news that came in was the IMF saying that India's contraction would be 10.3, a little worse than what the RBI said, but I would firmly go with what the RBI said. I think they would know better. There is a little known one line from the IMF which was a little heartbreaking. With this year, Bangladesh's per capita income increases over India's per capita income because of the contraction in the Indian GDP. That was the only unhappy, perhaps takeaway from the IMF report. We take a quick break on that note. We're going to come back and then it'll be all micros. We're going to discuss the top stocks that should be on your radar.